Welcome. We are really starting to get back to some normalcy in our lives. I know a number of individuals now that have been waiting to do some travel that are now putting not only travel plans in place, but are already doing some travel. That's fantastic, because what that means is that we are, again, getting back to some normalcy, but that the vaccine is causing a sense that, there's an end of the pandemic, there's an end to this, and there's some light at the end of the tunnel. Now, the only thing here is that this is not a free road, though. We have had all the stimulus packages that we have passed up to this point. We had the third one just come out, the $1.9 trillion plan that President Biden signed into law about a week ago. Now, we're already talking about the next plans, and this will be not only a stimulus, but also kind of an infrastructure plan as well. We need to just spend a lot of money on infrastructure. There's a lot of things in this, not only in this country, that needs to be upgraded or improved upon. So that's a great thing. There's a however, though, is that, like I said, this has not been a free road. This has not been something that we are going to just easily have come without consequence of needing to figure out a way to fund it. So this could be anywhere from $2 to $4 trillion is what we're anticipating. And now President Biden is saying that he wants to increase taxes. Now, he's been talking about this all along. And the first one that he wants to increase is the corporate tax. Now, under President Trump, we went from a very high number down to about 21%. So we cut it almost in half. And that brought us a little bit more into the realm of where the entire world is with respect to corporations. So it made us much more competitive. President Biden now wants to be increasing that from 21% to 28%. So not an overall massive tax, but it has the potential to have some ramifications. So there's going to be some things that come out with the tax that we just don't know what's expected and what's to come, but that's going to be a revenue increase. The other one that we're going to have is that he's going to be raising taxes on those individuals who make over $400,000 married, filing jointly on a yearly basis. So this also has the ability to raise additional capital and revenue. So that's the first part that he's going to start at. And there may be other parts, there may be other things and other tax brackets that he comes back to. But for right now, he's looking to raise taxes to start making up for some of the deficits that we've had over the last year. So with that, there's always planning opportunities that you can do, that we can start talking about, whether you're owning your own business and how can we work with the new tax laws, how can we work with what's coming to do some planning correctly, or you as an individual or your family need to be figuring out different ways to put money aside so that we are not being taxed unnecessarily on that higher amount. So those are just things to be considering as we're talking forward with what's to come. There's a pretty good expectation that we're going to have a tax increase, and it may not just be on the 400,000 and above. It may be coming down the pike that we have to raise taxes across the board to make up for some of the deficits. So do some planning. There's a lot of tax planning opportunities that can be done with this, and feel free to reach out, because we can definitely talk more about how this planning can be beneficial to you. With that, have a great rest of the day and take care.